Imagine a day where you no longer have to work. You can just sit back, relax, and the money just comes in automatically every month. Sounds nice? This can be you if you have a proper passive income portfolio. That's why in this video, I'll be sharing the top 6 investment options to earn passive income. Most of them have little to no risk, don't require you to spend too much time to manage, and are quite stable. But before I start, do join my Telegram group to discuss or ask any questions that you may have. Alright, let's jump right in. First, CPF Life. CPF Life is an annuity plan by the Singapore government. It was launched back in 2009 with the goal of providing retirees with a monthly payout. This is to ensure that Singaporeans do not run out of retirement savings during their golden years. So, how CPF Life works is this. When you turn 55, CPF will create a new CPF account called Retirement Account or RA for you. They will then transfer the savings from the special account and ordinary accounts up to the full retirement sum into your RA to form the retirement sum. The amount in your RA will then continue to grow at 4 to 6% per annum. Then, when you turn 65, you will start receiving a monthly income from CPF Life. The magical thing about CPF Life is that you will keep receiving payouts for as long as you live. So, pro tip, try to eat healthier, live longer, so that you receive more payouts, yeah? Depending on which plan you have chosen, the amount of payouts that you receive will be different. Under the basic plan, the payouts will start low and fall when your CPF RA balance drops below 60k. Then, under the standard plan, you will receive a fixed payout for life. And finally, under the escalating plan, you receive lower payout initially, but the payouts will grow by 2% every year. As for which plans you should go for, I've previously done an analysis in this video and found that even though the basic plan gives you the lowest monthly payouts, it will actually give you the highest amounts in total if you count in the bequest amounts. So how can you make full use of your CPF Life? One thing you can do is top up $8,000 to your CPF SA or MA every year. This will allow you to save on taxes while bringing you closer to the full retirement sum, which is $205,800 in 2024. Then, assuming you turn 55 this year and have chosen the CPF standard plan, you can expect to receive a monthly payout of $1,670 once you turn 65. This amount is enough to cover the basic living cost in Singapore, which is estimated to be around $1,492 for a single elderly person above 65 years old. This includes expenses such as food, healthcare, transport, housing, and utilities. But wait, that's not all. You can further increase your CPF Life payouts by doing a few simple things. First, you can top up your retirement account up to the enhanced retirement sum to increase the payouts. This top up can come from either your cash savings or from your OA or SA into RA. For example, let's say you are 55 years old today and have $205,800 FRS money in your RA. By topping up 50k more into your RA, your CPF Life payouts will increase by another $250 per month from age 65 onwards. Second, by deferring your CPF Life payouts to only start at 70 years old, your monthly payouts will increase by up to 7% for each year you defer. And third, under the Silver Housing Bonus Scheme, if you move from your current HDB flat to a 3-room or smaller flat, net proceeds from your current flat will be used to top up your RA, which will boost your CPF Life payouts plus receive a cash bonus of up to 30k. Moving on, annuity plans. Annuity plan is quite similar to CPF Life, where you contribute money to the plan. Then, when you reach the retirement age, the plan will give you monthly payouts. So, how do annuity plans work? Let's use the AIA Retirement Saver 3 as an example. Assuming you are currently 35 and want to enjoy a retirement income of $1,000 from age 65 onwards. By contributing a premium payment of $5,020 to age 65, you will have paid a premium of $150,600 in total. Then, at age 65, when you become an old Apek or old Ama, you can start making withdrawals of $1,000 per month and a projected monthly dividend of $521 a month. Plus, you will also receive a projected lump sum terminal dividend of around $72,900 at age 80, which is not too bad, yeah? But of course, this is just one example. There are many other annuity plans in the market that are also worth considering, such as NTUC Income Grow Retire Flex Pro, Manulife Ready Life Income 3, and Singlife Flexi Retirement too. Some plans even offer attractive sign-up bonus like the Manulife Retire Ready Plus 3, which will let you earn up to $800 cash rewards. Not sponsored of course, go speak to your financial advisor to find out more. However, it is still important to understand the policy details before you commit to any of these plans, because if you suddenly decide to stop the plan before it matures, or you kena an early termination penalty, then you'll be like, but I thought we already have CPF Life? Is there even a need for annuity plans? So unlike CPF Life, the good thing about annuity plans is that you have the flexibility to structure the plan based on your needs, such as the payment and payout terms. For example, if you are in your 20s or 30s and have a stable income, you will be able to commit to a longer payment term, say 20 years or even 30 years. Or if you are in your 50s and nearing retirement, you can choose a premium term that is as short as 3 years. Then in terms of payouts, you can either choose to receive the payouts for a number of years or for your entire life. And lastly, if you manage to find a better annuity plan than CPF Life, you can actually opt out of CPF Life, meaning you no longer have to set aside a retirement sum and can even withdraw all your CPF retirement savings. Next, money market funds. A money market fund is a type of mutual fund that invests in high-quality short-term debt instruments, cash and cash equivalents. The one special thing about money market funds is that there's no payouts. Instead, the returns are accumulated daily and compounded over time to give you even higher returns. Plus, the good thing is that for money market funds, unlike fixed deposits, there's no lock-in period, which means if you need the money, you can liquidate and get back your money within 3 business days. Currently, one of the best money market funds that you can consider is the Fullerton SGD Cash Fund, which is giving around 3.8% 7-day yield. This fund can be found in low-cost brokerage platforms such as Webull, Tiger Brokers, and Mumu Singapore. However, just take note that even though money market fund is low risk, in the end, it's still an investment, yeah. So there's still a risk of losing money by investing in money market funds. But speaking of money market funds, did you know that UOB AM Invest also offers a short-term deposit money market fund? To access this fund, you can head to Fund Direct, then look for United SGD Money Market Fund Class B SGD. As of December 2023, this fund aims to provide a return of weighted average yield to maturity of 3.74%. This is comparable to that of Singapore dollar short-term deposits, and it invests mainly in MAS T-bills, thereby saving you the hassle of applying for T-bills yourself while avoiding the 6 to 12 months T-bills lock-in period. This fund doesn't have a lock-in period, and it is highly liquid as you are able to redeem the funds and get back your cash within 1 business day. And because this fund mainly invests in short-term government bonds, it is very low risk and is suitable for investors who wish to park their excess cash in order to make their money work harder. On top of that, the special thing about this money market fund is that it's an institutional class fund as compared to some of your usual money market funds, which are retail class funds for retail investors. This means the United SGD MMF Class B SGD fund is cheaper and is usually not available for retail investors. But now, you can get it at UOB AM Invest, which lets you start investing with as little as 1 SGD, and there's no sales charge, no withdrawal fee, no platform fee, none of that nonsense. As a bonus, if you sign up using my link down below, you will get to receive a 10 SGD credit. Terms and conditions apply of course. And with that being said, let's get back to the video. Next, the Singapore Savings Bonds is also another good option for passive income, which SSB has a term of 10 years and payouts are made every 6 months. Right now, the January SSB is expected to give an average interest rate of 2.83% per annum if you hold it for the full 10-year period. The good thing about SSB is that it only requires a very low minimum investment amount of $500. You can easily withdraw your capital anytime and get it back within 1 month without losing any money, and it's practically risk-free since it's guaranteed by the government. With interest rates on the high right now, make sure to invest in SSBs to lock in the high yields, yeah? Moving on, fixed deposits. While CPF Life and annuity plans give you long-term payouts, fixed deposits, on the other hand, gives you payout for a few months. Fixed deposits are good if you know you need to use the money a few months down the road and are just looking for a place to park your money for the short term. For example, saving up for a wedding or buying a new house. Currently, Bank of China is giving the best FD rates at 3.6% with a minimum investment amount of 5,000 SGD and a tenure of 3 months. To look for the best FD rates, you can check out this Singapore fixed deposit rates comparison website, which will tell you the best rates depending on the amount and the tenure. The good thing about fixed deposits is that they are insured by SDIC by up to 75k in case the bank fails. So it's a pretty safe investment, yeah? Lastly, dividend stocks. Out of all the options on this list, dividend stocks have the highest risk because if you choose the wrong stock to invest in, you will lose money. However, if you are able to invest in good dividend stocks, it will be a reliable source of passive income, since the dividends will actually go up over time. Plus, you get to enjoy capital gains when the stock goes up. So what's the trick to choose good dividend stocks? Here are a few criteria. First, go for Singapore dividend stocks, since you get to avoid currency risk and estate tax, which may tax you up to 40% of your investment when you pass away. Second, look for dividend stocks that are able to consistently increase the payouts over time. And third, this is most important, don't go for dividend stocks that give a high yield, since it's not sustainable. Only go for those that can give anywhere between 3 to 6% yield. Some of the best dividend paying stocks in my opinion are DBS, which is the best Singapore bank, CapitaLand Ascendas REIT, which is Singapore's largest business space and industrial REIT, and CapitaLand Integrated Commercial Trust, which is Singapore's largest REIT, all of which currently gives around 5% dividend yield. But of course, make sure to do your own research before investing in them, yeah? Otherwise, a lower risk way of investing into dividend stocks is by investing in ETFs that pay dividends instead. For example, the Spider Straits Time ETF or Lion Phillip S-REIT ETF, which invests in the top companies in Singapore and have a dividend yield of around 3 to 6%. So those are some of the best investment options that can give you some good passive income. But which do you prefer? Do comment down below and let me know. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.